actually give you 5-year outlook on what they expect their business to look like in 4 or 5 years. And they've been doing it for a while, and they were actually exceeding what they set at their targets in the past. So if the management team is to be believed, and if we buy into their targets, it'll be a great investment. And Brookfield is a very strong recurring revenue business. It's got multiple facets to the business. One side is asset management, where they have other people's money that they're putting out to work and getting fees and such. They also have their own balance sheet where they co-invest and so on. And they've got stakes in other companies they've listed in the past and so on. And they've just got the quality of the assets that they own across different industries is truly exceptional. Going after the very best real estate properties. They've got great hydro plants and railroads and a number of different interests. Recently, they did a deal with Intel to partially own foundry that they're going to set up together. And they've also now entered the music business, the music licensing business and such. So I think it's a very good team. I've always liked Bruce Flatt a lot. And so, yeah, we have a stake and we think they'll do fine. You could probably buy a basket of these and do well. I think if you bought Brookfield, Blackstone, Apollo, all of them, if you just put them all in a basket and bought them, they would all do well. I think Brookfield may do better than the rest, mainly because of the DNA differential between them. So if you look at KR or a Blackstone, they come from a private equity world. If you go back to the history of the original funds and deals and whatever, it was a classic LBO private equity type starting point. Brookfield's starting point actually goes back a long way, several decades. And they really were not a manager of other people's money. They were really investing their own money. And then Bruce Flatt came on the scene and became CEO maybe more than 2 decades ago. He got rid of all the businesses which he didn't think were that high quality. They were in a bunch of mining and different things. He got rid of those businesses and he focused on extremely high quality, long-lived infrastructure assets. And the private equity world, generally speaking, because it's so competitive, has not recently and even historically has had very high filters on the quality of the business. They always felt that they could buy a mediocre business, do some financial engineering, and still make a good return. Brookfield didn't take that approach. Their approach was that at the core, they want to have a great asset. And then later, they want to look at how they can finance and do other things with it to make it great. So I think the KKRs and Blackstones of the world have moved towards Brookfield in the way they think about it. But I think that when I look at just long-term DNA of how these companies think, I just think that Brookfield just from day one had the right DNA. It's not optically cheap. None of these guys are optically cheap. They're not expensive either. But I think if you look forward, if you're a sovereign wealth fund, you're like the Qatar Investment Authority, Abu Dhabi Sovereign Wealth Fund, and so on, you have very large amounts of money to put to work. And there are very few entities or places that you can put this capital with, which are very high quality places, very high quality teams, and they can be there with them for a very long time. So it's an oligopoly type business where there are like 3-4 players that all these guys have to come to. At the end of the day, when they want to invest, they have to come to one of these 3 or 4 toll bridges to make the investment. And the assets under management they have is going to grow a lot. The carried interest is going to grow a lot. The fees are going to grow a lot. And they are creative about entering new areas like music or semiconductor foundries and so on. It's fine. Clearly, I would say office properties in general across the world are facing much higher vacancy rates than they did before because of this trend. And so obviously the demand has gone down because Brookfield sits at the very top end. So they've always wanted to invest in tier 1 cities in the very best properties, the kind of the trophy properties in these like Brookfield Place or Canary Wharf and so on. And so these would be the last ones affected. And so their rents will go down, but the ones at the periphery will just have high vacancy, whereas the trophy properties will just have lower rents.